BigBear AI has had a crazy year, rising over 500% to a high of over $10 back in February before crashing. Now, after an incredible summer rally, the stock has dropped about 40% again back to $5. BigBear has been compared to and even called the next Palantir Technologies, but after a recent earnings disaster class, is BigBear really a billion-dollar company in the making, or has this company simply been overhyped in an AI boom? They are signing major contracts, they have major partnerships, and they have real products. So what is going on at BigBear AI? In this video, I will look at this in detail. Now, we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? It takes a lot of time to make these videos, but it literally takes 2 seconds and costs nothing to smash the like button, and it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get into it. Now, first of all, what is BigBear AI? BigBear is a leading provider of AI-powered decision intelligence solutions. Customers and partners rely on BigBear AI's artificial intelligence and predictive analytic capabilities in highly complex, distributed, mission-based operating environments. BigBear provides decision intelligence solutions for supply chain and logistics, enterprise operations, autonomous systems, cybersecurity, and partner with customers to design and implement solutions tailored to their needs. BigBear has been providing AI solutions within the defense and intelligence market for many years and have a growing presence in the commercial sector. And their customers include government and defense, manufacturing and warehouse operations, and healthcare and life sciences. But BigBear has been getting a lot of attention lately as they have been winning major contracts. So BigBear AI has been rising again for the past 2 days, and yesterday the company announced deployments of enhanced passenger processing at the Nashville International Airport, with VeriScan, BigBear's AI biometric technology supporting EPP. US citizens arriving at BNA can now move through customs more quickly and seamlessly. But as we've seen over the past few months, BigBear is signing a lot of deals like this one. BNA joins a growing number of major airports and ports of entry, implementing EPP to streamline international arrivals. CEO Kevin McAleenan stated that BigBear AI's advanced identity verification tools streamline passenger processing while giving officers real-time insights to make faster, more informed decisions. But I feel this news just a couple of weeks ago is a far bigger deal than people give it credit for. And that is that BigBear AI signed a multi-year partnership with Washington Commanders, under which BigBear becomes the naming rights partner for the Commanders training facility, which is now named the BigBear AI Performance Center. In addition, BigBear AI's branding will be featured across many key assets, but this is a foot in the door with the NFL, so to speak. And BigBear will continue exploring opportunities in ways that align with the organization's shared goals and the framework established by the NFL. Now, this is important. BigBear AI is going on the offensive, and this partnership exemplifies our strategy, according to CEO Kevin McAleenan. We're stepping onto the national stage with one of the NFL's most recognized franchises. Our partnership marks the first in a series of decisive moves we are taking to strengthen our position and unlock the next chapter of growth. So in the words of the CEO himself, this is just the first in a series of moves to unlock the next chapter of growth, so there could be good times ahead with explosive growth. And that leads me to the elephant in the room. We've seen a lot of contracts being signed by BigBear over the past year. Lots of deals. They have contracts with the Department of Defense, the NSA, the Air Force, multiple airports, and now even the NFL, as well as overseas contracts. So many deals, in fact, that before they released their most recent earnings report, they had said that their backlog had increased 2.5 times from 168 million up to 385 million by March. So with all the new contracts, we were expecting to firstly see a substantial and long overdue revenue increase, but also a growing backlog that would fuel some optimism about the company's future. Now, to be fair, so many AI companies have exploded over the past 2 years. Just look at the likes of Palantir, for example. The stock is up 2,000% in just 2 years. But Palantir's growth as a company has been explosive in the past few years. Revenue, margins, profits, and future guidance. And although Palantir is one of the most high profile alongside Nvidia in this AI boom, there is a lot of companies showing very strong growth along with strong stock momentum. But then we have BigBear AI. Sure, the stock is up about 230% in the past year, but only about 25% in 2025, and it's trading at close to half its price that it went public at. Now, when they released their earnings report last month, revenue decreased 18% to 32.5 million for the second quarter compared to 39 million in the second quarter of 2024. Gross margin was 25% compared to 27% the year before. Net loss in the second quarter of 2025 was 228 million compared to a loss of just 14 million last year. This is absolutely huge. This is not just a minor loss or a small step in the wrong direction. This is a massive loss. 228 million loss on revenue of only 32 million is a disaster. But they did say here that the increase in net loss was primarily driven by non-cash changes in derivative liabilities of 135 million, as well as a non-cash goodwill impairment charge of $70.6 million. But even taking these out, because these are not usual operating expenses, it would still be a loss of close to $20 million, a big increase on last year's figure. Their EBITDA was down to minus 8.5 and their backlog stands at 380 million. So we had expected that this backlog would have increased on the back of all these deals, but it hasn't really changed that much. But what is probably more damning is that full year 2025, the company now projects revenue between 125 and 140 million. Now, before I look at the 10Q and why this is important, if you're enjoying this video so far, don't forget to give it the thumbs up and consider subscribing to the channel if you're new. So looking at the 10K filing, looking at the income statement, we can see that revenue for the first 6 months of the year was 67 million. So we just seen that guidance was between 125 and 140 for the year. They're pretty much expecting similar numbers for the rest of the year. If they did the exact same revenue in the second half of the year that they did in the first half of the year, that would come in at 134 million for the full year. Now, if this was a company like Palantir, I would expect them to beat guidance. Or if this was a company like SoFi, I would expect them to absolutely obliterate their guidance and post huge figures. Because that's what these companies do quarter after quarter. But BigBear do not do that. Like, revenue for the first 6 months of this year, 67 million. But if we jump back to 3 years ago, back to 2022, you can see they had revenue of 74 million for the first 6 months. Or 2023, they had revenue of 80 million for the first 6 months. While so many AI companies have been booming over the past couple of years, BigBear AI has yet to see any real revenue growth to justify their valuation. Now, I'm not saying that won't happen, but I had expected big things from the most recent quarter. I won't lie, I was expecting them to show real signs of progress, but that hasn't really happened, or at least it hasn't happened yet. And this has led to some serious analyst revisions. So what do analysts think of BigBear stock right now? And we can see here that the consensus price target is just $6, with 2 analysts rating this as a buy and 2 rating it as a hold. And looking at the most recent here, which was set by H.C. Wainwright just after their earnings report, where they lowered their target from $9 down to $8. But could BigBear actually be the next Palantir Technologies? Or could this stock be the next 10 bagger? Now, I've talked a lot about the differences between Palantir and BigBear AI many times on the channel over the past year. Growth and profit margins alone make these companies completely different. But their business model is different too, even if a lot of people are comparing them like as if they're similar. But this other article makes some very good points, and it likely shows why BigBear is not showing explosive growth and why margins are so bad. Now, make no mistake about this, the company does have huge potential, but their business model is flawed at the moment, and this will explain. BigBear AI specializes in providing custom software solutions. The largest is its US Army contract valued at $165 million. BigBear was picked to build the Army's Global Force Information Management Objective Environment System. However, here's the thing. None of these software systems are the same. And this highlights an area of concern. BigBear makes custom-tailored solutions. Now, most software companies offer a base software package that can be tailored for multiple uses rather than developing a separate package for each use case. This allows most software companies to have strong gross margins, the sort of margins we see at Palantir. But because BigBear must develop a new product for each contract, its gross margins are relatively low. Their margins are under 30%, while most software companies have margins between 70% and 90%. If you follow these types of companies, then you'll have seen so many of them mention the rule of 40 so many times. You will not see that mentioned anywhere near BigBear AI. And because these systems are all custom made, it takes a long time to develop them. Now, I did have someone ask me in the comments a few weeks ago, how is it that a software company can have such a big revenue backlog? And it was a fair point. But when the company has to custom tailor every system, then this takes a lot of time and a lot of resources. With their current business model, I think it's fair to say that BigBear will never be able to achieve big profit margins like other software companies because its gross margins aren't even 30%. And there is a recent article on Forbes too looking at BigBear and asking the question, will BBAI stock rebound to $10? Now, this article talks about some of the points that I've already made, but it also looks at a few other factors, such as the justification for a $10 price target, but it also includes a look at the downside risks. Anyways, I've put a link to this article in the description because it's well worth reading. But guys, what do you think? Will BigBear stock go back to $10 or even $15 like I've seen some people predicting? Or does BigBear need to change their business model slightly to allow for a more streamlined solution and increase margins like other software companies? Let me know your thoughts in the comments below and always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and comment, and I'll catch you in the next video.